Yes, ma'am.
Okay. Thank you. My name is Manju Silvaraj. I'm doing investment and trading for around 3.5 years, and I have learned much more about stock market. I'm currently doing a certification from NISM, that will be completed within 3 months. So I'm planning to do it. So. So this topic is all about the power of investing at young age for medical students. Why someone needs to start investment means you have to build a wealth over a time. What is the difference? First, let's understand what is the difference between savings and investment. Okay, what savings? What you will be doing? Whatever the income that you are earning minus the expenditure equal to savings. Okay, but what savings does the savings means you have a liquidity, you will use it for an emergency purpose. And for the short term goals means if you want to buy something, if you're planning to buy a mobile for a in 3 or 2 months, then you need to serve some money, right? Instead of going with a credit card emis and everything, you will be started having saves little of money for that to buy a mobile. Okay, actually buying a mobile with the money that you are going to save is the financial goal. So first you need a financial goal to either saving or the investment. Okay, I'm not covering a financial goal here, but that will be covered in the future coming sessions. Okay. Then what is savings? Savings will be a very risk is very low. Okay. You won't be having you nobody is going to lose money when you're saving, right? You are saving whatever you are having. But in investment, you will be having little of risk. So if you don't know anything, but you have some of your friends suggested to do trading or to do investment in one of the stock. Okay, what you did without an knowledge, you will be invested blindly with the help of your friend. Then what it will be, if some that the stock might have gone down for short term of time, because the in a stock market, for example, I'm saying a stock market, but there are many financial instruments that you can do investment, but I'm just saying a stock market. So if you invest 1,000 rupees in a stock market for short term, it will go up and down. It will never, no stock will go to the directly going up. Okay, never ever you have a bull market in any of the countries, so you will be having some sides market or something. Okay, so in that case, then whatever the investment that you have invested, that will be like gone down. Okay, so what you will be doing? Oh my god, my investment is lost, I have to I should not follow this. This is how the people were seeing an investment. Because what advices my parents gave to me is, don't invest in stock market, don't go do trading. Okay, because you will end up in a losses. Okay, so that's what other people were saying about the investment. One type of people blindly follow the investments, but you should not do that investment in that way. You should invest, if first you should learn and then invest based upon your research and risk. Okay, and return. So in your savings, you will be having a very lower return. Okay, the savings account, for example, actually savings account now giving us 6.5% or 6%, because this is due after the COVID. Because of the after the COVID, they were giving fixed deposit also. Now the interest rate is high, but when before COVID, it was only 4% or 3% the fixed deposit. So NSE is an example of, here I have given a NSE, which is a savings national savings certificate, that is also giving you a return of around 8%, say 6% per annum. Okay, so all these were, if you're having 1,000 rupees, the 6% return will be 60 rupees. Okay, in your savings account. So for 1 year, you'll be getting only the 60 rupees. But if you have 1,000 rupees, but you have invested in a share market for 9%, then you will be end up having 1,098 rupees. Okay, for example, I'm saying, so comparatively savings and investment is better choice when you are okay to create a wealth. So investment means, I'm not saying about a stock market and mutual funds. There were other investment like real estate. Okay, you know about real estate, right? Whenever you're buying a house, it will go up in the next 10 to 15 years. It will go. double the money it will give. So that's what the real estate. And then you are buying a lands and everything. So real estate is another type of an investment. Most of the most preferable way they were doing it. And the bonds is a different, total different financial instrument um, that is I'm not covering it completely here. So and you, whatever investment that if you are starting a business and it is going very good, that is also an investment. Okay, so you are investing your money to make it multiply it. Okay, so accessibility in the savings, you have a easy accessible to the money whatever you have. You want to buy something, you have a 10,000 rupees that in your savings account, you directly withdraw it and buy something. So it is very liquid. But in case of investment, it is not like that. Liquidity is very much less depending upon the investment type that you are going. Okay, and then time horizon for mostly the savings will be helpful in short and medium term, but in the long term view the investment is very helpful because you will create a build over a time. And uh, and then some why someone should start an investment at Engage. Okay, first let's understand what is compounding here. Okay, the compounding is first the person who is having 1,000 rupees. Okay, you have invested in any of the financial instrument, you bought something. Okay, you have invested 1,000 rupees for in one any one of the share. If that share consistently giving not consistently, it will be vary, right? In this year it might give 10%, that next year it might give 12%. uh, uh, the the other next year it will give minus 2%, like that. You won't be getting every year 9%. Okay, if you are invested in a stock market. So in the total, but in the long run, how much you, if you invested 1,000 rupees but you forgot that you have invested 1,000 rupees, but in after you are planning to withdraw it, you after 40 years. Okay, some you have, but how much the 1,000 rupees will become. I'm averaging that 9% of the risk of return. Okay, and then what amount you will be getting after 1,000 rupees were invested, and you will be getting 31,000 in 40 years. Okay, that I'm just giving an example how compounding is work, because the first year you will be investing, and then with the 9% you will be getting a return of 90 rupees. So what amount it will be giving? 1,090 rupees. Okay, this 1,000 will be the principal of the next year. So like that you will be getting. See, if you see here, in the 10th year, what amount you will be, your 1,000 rupees will become 2,300. But in the next another 10 year, how it will, the 5,600. But another 20 years it became 31 years. So that's how the compounding works. So that's why people are mostly preferred to investing in the stock market. Okay, because you will be getting, in the long term run, you will be getting a more returns compared to the whatever the investment that you have did. Okay, because you have invested only 1,000 rupees, but you end up in getting 31,000. Okay, so this is how the compounding works. So why someone has to invest at the early age? Okay, so here I'm compared two people. Okay, I'm compared person A investment and the person B investment. Okay, both of them have some goals. Okay, both of them have to invest 12,000 per year. 12,000 means per month 1,000 rupees. They have started the career at 21 or something, so they have planned to invest at 1,000 rupee every month, and it will be became a 1 year it will be became 12,000. So they are planning to withdraw it after 10 years. Okay, so what happened, every month they were investing 12,000. The person A is very consistent, and he started at 21 years. Okay, so he did investment at 12,000 for every year he doing it. Okay, and the person B who is planned, and he didn't do that investment at 21, but he did an investment 5 years later. Okay, means 26 he started investing, but he wants to match with the person A. So he started invested at 24,000 per month. He is saving 2,000. So per year he was investing 24,000. So the both, so see here the six the person who invested, the person B invested and started at the age of 26, and he is invested the same amount as person A. Meanwhile, the person A started at 21. Okay, so 24,000 is invested. So every month he is doing a 24,000, but he invested for five years. Okay, so I'm comparing an example for the mutual fund or some stock they were doing a SIP investments. Yeah, so the stock is giving a 10% annual return. Okay, for the person B has invested 10 years, only 1,000 rupees, but person B has invested 5 years for 24,000. Okay, the total amount both of this person A and the person B has invested 1 lakh 20,000. Okay, after 10 years, the person has 2 lakhs 10,374, but the person B who started investment at 5 years later, only the 5 years later, but he did the investment same as person A, but he got a return of 1,61,174 rupees. So the total difference is the person A and the person B is having a 50,000, almost a 50,000 return differences in there. Uh, but even though they have invested 1,20,000 rupees, the same as person A and person B. Okay, so this is the power of compounding when you started an investment at early age. So this is the biggest difference. If you keep on if you keep on postponing your investment at a early age, instead of early age you keep on postponing, even though you have invested very large amount for every month and matching with the person A, but you will end up having less money compared to the person who has started early. So that's why this session is giving you some of the insights about uh, investments. Okay, that's why you have started. If you have in working, if you are studying now, so you I know if you're studying you will dependent upon your parents and everyone. But if you started your career, if you are okay, I'm getting a monthly salary of your 30,000. Okay, when you start your career, so you want to save some money, so you will start and giving if you start for future you want to save money, so you will started earning. Okay, you started investing it in any of the mutual fund or share market, so you know about it, right? Instead of depending upon anyone, instead of depending at that time you will start in you have more time, now you have more time to learn about it. But when you start your career you will won't be having much time. That's why we were I'm collaborating with the RX Data and giving a session about investment and the financial freedom. Okay, then what is a benefit of ha- starting an investment at early age? Okay, um, so these are the benefits. So investment, what happens, you will be invested only 1 lakh 20,000 rupees, you have earned 10 years, you have earned 12, 1 lakh 12 2 lakhs 12,000 rupees. That example we have, Sandro. So it has created a wealth, right? Whatever the investment that you have done for very little amount, but you end up having a lump sum amount, right? So that is it helps to create your build wealth. Okay, if you have a financial habit, like if you started investment at doing an investment at every month and everything, the systematic investment is a SIP. Okay, so if you're doing it, then your financial habits will improve. Okay, develop it is very good to secure for your family, for yourself and everything, right? So that's why the financial habit will get improved when you start investment. Okay, investments beats inflation. This is an important thing that everyone should know about investment. Someone should say, why should I invest, it is very risky, if the stock market is gambling, like that and all everyone will say. But what happens if you are having 100 rupees today, the 100 rupees will not be the same equal thing, you can't buy it at the next year. Okay, whatever the 100 rupees now, that now the inflation is around, think about inflation is around 6%. Okay, so you can't buy the same 100 rupees things in the next year, because the rate at which the price you're selling will be different. That's what the inflation. So the 100 rupees whatever in your savings account will be 100 rupees, but you will be getting in the if you invest in a investment, you will be getting end up at 6%, the same 8% or 9% you will be getting. The 100 rupee won't be 100 rupee in the investment. That's why it is beats the inflation. So if you start investment, it beats the inflation and you can buy whatever you want. Okay, that's the inflation. And then financial, whatever the money you have, you'll be financially independent. You don't have to depend on anyone. So, and it reduces financial pressure. Exactly, this is what the reality is. If you have a money, there is no pressure. Okay, you will end up having happy life actually, if you don't have any financial pressure. Okay, so type of investment instruments in here. There were multiple investment instruments. One is the equity share, that is a share market. Okay, in the share market you will do mutual funds, bonds, everything you will be doing it. So the share markets there we call it as an equity market as well. Okay, and the mutual funds we can do investments. And the fixed deposits, fixed deposit is a type of a savings, but it will compared to the other instruments, investment instruments, it will return very small amount of in returns. Okay, then the public provident, ppf, and the national pension scheme, it is for the people who wants to secure their investment amount for their pension at 60 age. If you started investment in the national pension scheme, you will be having their lump sum amount for the people, for the retirement. Okay, if you have a financial goal and you want to invest it, you can do it a national pension scheme. That is also a fixed returns from the government, but it is variable when the government changes and whatever the inflation and everything. They were from the microeconomy and the macroeconomic depends upon that. They will change the uh, national pension schemes, the percentage of return. Okay, and the real estate is another type of an instrument investments. And the gold and the precious, the gold obviously it is like a precious metal, and silver, and so you will you, if you invest if you buy a gold, anyhow they will give it a lump sum of returns, right? If when you sell the gold, or when you wanted to lend the gold like that. Okay, and the bonds, and the bonds is a security market, that is a totally a different one. It is like on a share market only. Okay, and so I'm covering here, just giving a share market, what is a share market. So what is a share market is here, we will be buying and selling a share trade. Okay, just like that we are going a trade, right? So here we will be buying and selling a share in the publicly listed company. All the company that is listed in the share market is a public listed company. Okay, so it is a platform where you buy a financial instruments. Okay, same like a gold, if you buy something and you can sell it in the share market itself. So it is work and operates in the supply and demand. Whatever, if more demands is there, you will end up having a more return. Okay, if something is, the share price will go up. Okay, if supply is more, the share price will come down. So that's how the share market works. Mostly it is upon this supply and demand. Okay, then let's cover about myth about share market. Anyone have any questions, or can I proceed from here? Okay, let me proceed from here. Okay, so let's cover about a myth about share market. Okay, see, myth is like people around you have different opinion and different things about the share market. Okay, see, first thing, whatever you say to the people who is elder, who might have lost more on the share market. See, if some people might have invested amount at 2008. Okay, that year that is a scam that were happening in the America. Okay, the US market. But the stock market all around the world has been dropped down. Okay, if a people started investing at 2008, they will end up losing a money at losses. Okay, so if most of the people who have started investing at 2008, they will be end up in having a risky. They will say whatever they say, invest in a stock market is risky. But after 2008, the market is tremendously went up. Okay, so and that was, see, for example, I'm saying here, see, these are the sensex. You will end up you will hear about this term, right, in the news, and in the newspaper, and people around you will talk about it, right? The journey of sensex and the nifty 50. Okay, nifty 50 hits all time high, sensex hits all time high today, like that. Okay, so in 2000, see, actually it started at 1980. Okay, that time the share market trading is the sensex is around 1000 rupees, 1000, it is 1000 points. So now it is 60,000 in 2022. Okay, I'm comparing only this chart is having only 2022, but today it is was trading around
Hello, hello, ma'am. Mic is muted. Hello.
Yes, respected, please kindly say which method of investment is beneficial with no or minimal risk, stock or fixed deposit. Respect, please kindly say. Okay. Actually, the investment is the minimal risk is your if you have a risk like I'm saying Anirudh, if you have a risk potential, okay, if you have a medium risk and whatever you should know about your financial goal first, then you save the money. Bharat, am I audible? Someone has removed me from the meeting. Is it okay now?
Now audible.
Okay, I think I have lost the question, whatever has pasted here. Okay. The question is, which is a minimal risk? Okay. It is depend upon the risk potential and the financial goal that you are wanted to achieve. So if you want to achieve the financial goal in 20 years, so you will be going with a minimal risk of instrument that you wanted to invest. If you want, if you have the financial goals within 5 years or something, and you are okay to take a risk of more risk. Okay, the risk potential is more, then you can choose the instruments that is riskier. So it is depend upon yourself. There were products in the stock market that is very risky, because the small cap funds are very risky, but it give high return in a short term. Okay. But if something is coming, like the COVID has come, right? So that time the small cap has reduced more. Okay, the return has been in the minus. Okay, so in the negative side for that year. So that's what the depends upon your financial goal and the term that your financial goal you want to achieve, and the risk potential, medium or high or low, then you can choose that in the of investment instruments. Okay. And I think I have answered to the questions that were asked. Mm, Let me share this. Let me share my screen. For example, let me first tell you about what is Sensex and Index. Sensex and Index is like a book. You have a book with the index, right? In the index, you come to know what is the content that we're covering in the book, right? The same way, the Sensex and Nifty. Okay, they were saying Sensex hit all time high means the stock market today, all the stocks were outperformed. Okay, the both Sensex and Nifty 50. If Sensex has gone down today, means the stock market has gone down. Mostly the most of the stocks. Okay, most of the stocks were gone down today. That's how the Sensex and Nifty, so that you come to know about the way you comes to know about what is the status of the stock market with the help of a Nifty and index. Okay, Sensex index. Okay, so in the year when you see. they were saying, right, the stock market is risky. If it is risky, yes, it is. Meanwhile, it is risky. It is less risky. You can, that's what I said. As I said, the way whatever the risk potential you can take, you can choose the stocks and instruments based upon yours. Okay, so for that you need a knowledge of a share market. That's why if you can't see somebody is suggesting you to invest in a stock market for 5,000 rupees, but you can't you imagine like you didn't imagine about the negative scenario, but you imagine like you I'm getting 10,000 rupees. They might have influenced you, and they were saying in the crypto also same way. I'm hearing nowadays like there were some cryptocurrencies and people are started investing it, but see, you should not invest in any of them. Okay, any of the real estate, even the business also, you should not. You first learn it, you first understand it, you first understand the market structure, you understand the people around it. Okay, then you start investing it. Okay, so in the what happened is like, you imagine, first you imagine like 5,000 rupees, people you saying like it will become a 10,000 rupees. Okay, there were stocks which was performed 5,000 rupees even in the 6 7 months. It was given 100, more than 100% return. 100% means if you invested 5,000, it will become 10,000. Okay, means 10,000 means return, total amount invested and plus the return is 10,000. So that how a stock market works. So people might say you, see this what this you have to invest it. I got 10,000 rupees. Same stock might have given 10. Already it has given the 100% return. So how can you trust that person? And again you are investing it to 5,000 to the same stock means you should not do it. You should analyze it how the stock has performed. Oh, already it has given 100%. So this time there might be a profit booking in the stock. So the stock might have gone down. So if it is a fundamentally strong stock, if it is performing very well, then you do your research and research about the stock, whatever the future goals and whatever the company says and everything. Then you start investing in the stock, even though it is giving 100% return. Okay, that's how you should invest. You should not trust with anyone. Okay, so what I mean is the stock market is not risky, though it is risky. We should we should take a risk. Then only you can then only you can achieve some of the returns, right? But the risk is your depending upon your potential. Okay, and see, the stock market in 1980 it was trading around, the Sensex is trading around 1,000, but in 2022 it is around 60,000. Okay, and in the Nifty it is trading around 1,500 or something in 90. It was because it started in 1995 or around, and it is 1996, and it is started, and today it is going till 21,000. Okay, 21,800 around. So I this was like 16,000, then Nifty hit 16. For example, here I say the stock market will not go straight up, right? So here in Nifty 50 you will see that low, right? If people are invested in the low, they will end up getting a profit at the high. If people are invested at high, they will lose in this small gap, right? They will lose the money in small gap, and they will come out of a stock market. They will think it is very risky. They will come out. No, it will not like that. See, if you someone imagine someone has invested before COVID. Just now they started investment. They have started investing just before the COVID, and the COVID hit us 2020, right? In the March, the lockdown and all, no, the stock market were went down tremendously. Like you can't imagine the all the well performing stocks were come down. This is because if there is an uncertainty condition that is happening all around the world, the people will start panicking. Okay, then they will, whatever the investment they did, they will withdraw it. So whatever they, if more demands comes, more people have started withdrawing, more people have started withdrawing the money from the share, then you will end up the price will go down, right? That's what happened in 2020. So whenever the war comes, whenever some uncertainty situation that is happening in the economic, that is happening in the world, then the stock market will get down. So see, people think like if they have started, it's 2019, they have started investing, suddenly it is goes down, they what they will think, it is very risky, so I should not invest. The entire life they would not invest in the stock market. Okay, that's how the mentality that is changed. Okay, so in 2020, the stock market is went down because of a COVID, and then in 2020 after that, it is went like whatever. If someone has started, for example, I'm saying people know about stock market, they already know about it, and they have started investing at this low. Okay, in 2020, blindly whatever the company you want, the medical companies, right, the COVID, the medical, the vaccination, the medical, and everything has been that year. The pharmaceuticals companies that were giving a 100, you can't believe. Other sectors were getting down, but pharmaceutical sectors were going up in 2019. So you should know about this in 2019. So pandemic, it is a medical thing. So obviously people will buy more medical things and everything. So obviously the pharmaceutical company will be going up in that time. So if you know about it, all these things, how to analyze it, then you will invest in the pharmaceutical company in that time. So in COVID-19, the pharmaceutical sectors were outperformed, but other sectors were down. Okay, so the nifty were trading around in the end of 2021. It was trading around 16, but today it is 21,800 around. It is trading, and it is an all time. People have in 29 for the stocks. They were might be getting around 200% return also for the stocks that were invested in the 2020, like 2020 March 24 were the lowest uh, hit that nifty 50 has gone. And that time whatever the people who have invested in that, they will be getting 200% or 300% in any stocks. Okay, so most of the stocks were outperform. Okay, and what is the other myth that people were saying who doesn't know about stock market is, I'm sorry, sorry. Stock market is a gambling. See, actually, there were some scams where happened around the stock market, but that time there is no much regulatory. No, now everything has been transparent. Whatever, see, when you do even a single bank account, your Aadhaar card and PAN card has been linked, right? So you'll be end up having everything comes into like everything comes into a regulatory. So you can you it is not a gambling. Okay, if you do a stock market investment for long run, you'll end up having more returns. So it is not there is a regularity that is keep on giving keep on having all the risk potential, all the rules and regulations for the stock market. Okay, so you confidently invest in stock market, and you need to come from a finance background. No, you that actually, I don't know, some might have removing me from this session. That's why I'm keep on disconnecting from it. Okay, let me share my screen. Whoever is doing, please don't do it. So the third point is that's what I'm saying. You need to come from a finance background to do a stock market. No, you if you have an interest, you learn about finance, you know about all the risk potential and how to set the financial goals and everything. You will you start doing investments on your own. Plus, don't trust any of the calls, any of the advices from anybody. But if they are from SEBI registered, or whoever is doing investment and they were doing it good, do follow them, but don't blindly follow someone. Okay, and lots of you need lots of money to invest. No, absolutely not. If you even you have 1,000 rupees, you start do a sip in the mutual fund or stock, any of the stock you wanted to invest, you do it. Okay, then you'll end up see 1,000 rupees and getting 500. The percentage you need to compare, you should not compare the money that you are getting. Okay, if you have invested 1,000 rupees, you'll getting a 500 profit, then it is a good return. Okay, invested 1 lakh in that same stock giving a 550% return, you will end up having a 50,000 rupees. The amount, you should not compare the amount, you should compare only the percentage you have invested. Okay, so you should if whatever the money you have, uh, instead of having a savings is important, because the saving, I will not say savings at all, savings at all is not needed. Saving is for emergency. Okay, whatever the liquidity, apart from savings, you need to do, you need to have a financial goal, and you need to um, uh, see about your future thing, then you will do a investment. Okay. mm, then let's see about if some people are saying like you should not, you should have a lot of money, right? So example, in the Britannia, see, everybody know about Marigold, Britannia company, right? The biscuits and everything they were producing, right? If the sales goes up, thinking Britannia started, the Marigold's biscuits started their sales, and it is if the sale is more, the company is getting profit, right? Anyhow, that is how the company, the share market works. The company that is listed in the share market works. Mostly the profit is goes up, then the share price will go up. Okay. See, uh, if a Britannia was trading in the 20, around 2017 or something, it was trading around 1500. Okay. It is today like this was taken in 2023 December, and they were, it is trading around 5000 rupees. Imagine if you have invested 1500 in 2018 or 27. Meanwhile, in the long run, in the around 7 years, it has given is 5000 rupees. See how much return they have given. So that is a need, that is an important thing in the investment. You, in the long run, you will end up having a lump sum amount. In long run, you will end up having a more returns. Okay, more percentage of return you will be having. Okay, so okay, let me give you one of the activity to everyone in this group. So anyone know about Hindustan Unilever? Okay, it is a FMCG company. So let me know what are the products this Hindustan Unilever company is producing. Can I have everything in the chat, please? Anyone use Google and everything? Oh my God, too many questions. Yeah, exactly. Vivian is saying correct. It's about the time you stay in the market, not when someone enters the market. So Hindustan Unilever company, what are the products they were producing? Yeah, take help from Google. Life Boy. Okay. Where can I learn Shabna? I just want to learn while I'm in college. Yeah, exactly. I'm here to guide you about the share market. We will be going to have multiple sessions after this. So, comfort, soaps, Dow, face wash, yes, Horlicks. Okay. Mm, which platform of investing stocks? Okay, I'll guide you about it. Is there any problem providing a virtual money for learning? Is there any platform providing a virtual money for learning? What about the virtual money you were saying about the crypto or many products which are for daily use? Yeah, exactly. So ice creams, wash. Yes, actually, FMCG is a sector. It is a whatever the products that we're using daily. That is, yeah, Vaseline also is a part of that. Yeah, you're right. Everybody is right. Okay, next time, if you go to any a grocery store, in the rack, you say, right? I was thinking maybe if somebody might have known it before, but I was thinking Dow is a different product company when I don't know about. Do you mean demo trading? No, no, no. Actually, I'm not here to do any trading. I'll be only giving. Do you mean demo trading? Okay, virtual money. Okay, you can end up you can have a trading view platform to do a trading, Vivian. Okay, the trading view platform supports a virtual money and you can do a trading. But just giving you an advice, do a research and do a trading, because don't trade blindly in the stock market with the help of with the real money. Okay, so learning, yeah, first you need to do a virtual trading, but I'm not giving trading advices here. I'm only giving investments for now. Okay. Um, and also whatever doing an investment, can you yeah, we can do it trading view. Maybe I can search you other platforms and give you whatever platforms that were giving virtual money, and you can do trading. And also for intraday trading and all, don't follow any calls from a Telegram or something, because most of the scams were going on. So you will end up having a losses. Initially it will looks like you will end up gaining a profit, but most of the time when you giving your monthly returns, it will you will end up having losses. Okay, so make sure you learn and you can do it intraday trading. I'm not saying you can't do it, but you research on your base to learn and research, do it. Okay, can you tell me where can I learn about stock market? I just want to learn while I'm. Yes, yes, Ashutosh, sorry, maybe I'm pronouncing your name wrong. I'm sorry about it. Yeah, actually, I'm going to do a session about stock market and share market in the upcoming days. So you can learn from me, or you can do a learn from YouTube and everything. Okay, YouTube is a good platform. You can learn from there, but you there will be a clumsy, like you can't do it. Respected speaker, are you all terms Bitcoin, cryptocurrency, digital rupees are same or different? Kindly clarify with the example. Okay, actually, Bitcoin Bitcoin is a cryptocurrency. Okay, Bitcoin and other were the cryptocurrencies. So they were mining it. Mining it means they will be resolving one of the math equation. If somebody is having a Bitcoin, you will be same like a shares. You will buy from them and you will sell it. Okay, in the crypto market. But what I'm saying is, a crypto market is a worldwide market. There is no, but it is very. They were saying it is very. A very like it is not more risky, but it is not like that, but it is risky. Actually, the crypto is because very volatile, because the entire market is running for 24 hours, right? There's a crypto, but digital rupee is from our Indian government has introduced a digital rupees. Instead of having a physical rupee, you can buy that a digital rupee with the help of a physical rupee, so that they were improving it to do the transaction transparently. So that's what the digital rupee is. It is from the authorized government, like Indian government also introduced a digital rupee. You can buy it and use it for our any other purpose, but now most of the people is not adapted to digital rupees yet. So maybe in the upcoming years we might see more growth about it. Okay, so okay, let comes to the session. Sorry, yeah, I'm answering you. Yes, you are all are right. The Hindustan Unilever products, Hindustan Unilever products were see why Hindustan Unilever project I've choose here. See, these products were all in the every day to day life, right? Every people will buy it. What happen is, like, if people are buying their products, the company of the products, anyhow they will getting a profit, right? So if the more people are buying, and the people or common people are buying it, they have set of the Hindustan River Unilever products were like targeting a people. Okay, they will think a Dow is a very good, and they will it is having a more cost compared to Hammam. Okay, that is also Unilever product. They were targeting multiple level of peoples. Okay, so they will buy the Hindustan Unilever products. Next time when you go to the grocery shop, you see, okay, which company has produced this product. Okay, if you turn around the product cap, and you can see that whoever is manufactured the product, the company name will come. So most of the products were a same company, so we were end up buying a same company products. Okay, so the Rin and Surf Excel is the same company. Okay, so people are some set of a people will buy Surf Excel, some set of a people will buy, we think it Rin and Surf Excel. Some people will think Rin and Surf Excel is different company, and they will end up buying a Surf Excel, and some people will not buy. But the profit goes when people are buying both Rin and Surf Excel, end up in a Hindustan Unilever. So Hindustan Unilever uh, products are giving a good return. Whenever the products are selling, they were getting a profit, and they were giving a good returns, and they were giving a dividends to the whatever the shareholders that is having the shares. Okay, I'm not covering here dividend now. Maybe in the upcoming sessions we will be knowing about it. Okay, Citla. Okay, see, most of the people here are coming from the farms, pharmaceuticals, farm D. So, you know about, right, the Cipla, the products that Cipla were making, and the medicines, right? So this Cipla company, see, in 20 for example, it started trading around 1999. It was 25 rupees Cipla, but after the company has been grown, in December 2023 it was trading around 1200. Imagine, it is trading around 25 in 1999. Within a 20 years it is trading around um 1200. Okay, so this is how the stock market works. It in the long run you will be having more returns. Okay, in 2020, I said, the pharmaceutical companies were giving a tremendous return. In the 2020 to 2022, the 2 years of span, the Cipla was going very high because it was down the same way the pharmaceuticals was down in 20 March 24 because of the lockdown and the uncertainty condition in the market. It was around 400 rupees in the 2022 until it was went up like anything. You had like 1,000. It was staying around 1,100. Okay, so whatever the percentage in the long run from 1999 it was giving 5,000 percentage. Do you imagine this percentage? 5,000% they were giving whatever the investment that you have did in 1919. Okay, we are not in 1919, but what I'm saying is some stock were doing a good now. They were trading around 200 rupees. In 20 years later, you will be the stock might have gone like anything. Okay, so you should not lose this percentage returns that we're giving. So that's what I'm trying to say, do an investment at early age. Okay. Mm. So Sun Pharmaceutical, same way some pharmaceutical. For example, I'm comparing here only 1 year. Um, 1 year, this pharmaceutical company has performed very good in 2023. In January 2023, this company has like same way I said, no, the stock will not go directly to high. It will go up down only. Okay, so it is not a bull run. Any stock will not have a direct bull run. They will have some sideways market, they will have some lows, and then it will go. Okay, support, resistance, and everything, it will come and then it will go up. So you should know about technical analysis and the financial analysis, fundamental analysis, and know about what is happening in the sector, what is happening in the economic, what is happening with the growth, what is happening in and around, so that you will about when you start investments, you will end up you will end up learning about these all things. Okay, so in the 1 year of Sun Pharmaceutical, it is giving 26%. See, you have invested around here. You have invested 1,000 rupees. You will be getting 250 rupees within a span of 1 year. So it is around 26% they were giving a return. You can't imagine nothing. Uh, Nothing investments will give you this direct 26% in returns, right? So that's what you will do. You will creating a wealth in the long run. Okay, and see, for example, I've compared the Reliance share. Reliance is, right, Ambani, uh, it's a group. So they're having a Reliance industry, and they were doing investments. They were doing company were doing performing oils and mostly oil and refineries. Okay, this company will be coming under it, but they were doing some more things. Okay, so in 1990, some of your father or something, they have invested 25,000. Okay, something at 2,000 rupees. For example, I'm saying 25,000. They have invested at 2,000. Okay, year 2000, you will end up having 390 shares in that time. Okay, so because of it was in the 2000, it was trading around 64 rupees. So in 25,000, if you have invested in your father or someone has invested it in 25,000 in Reliance share, you will end up having 390 shares. Today, how much this 25,000 became snow in December 2023? 97 9 lakhs rupees. So imagine 25,000 within a span of 23 years, you will be having 9 lakhs rupees in your hand. So this is how the investment works. It will help you create a built wealth over a time. Okay, and this is This example, I wanted to give you one. So if you know about stock market, you know about the fundamental analysis and in trading, like technical analysis. Say on August 2023, see 6 months ago, the IRFC stock. Okay, this IRFC stock. If you go to any of the website, you could see this chart. Okay, in IRFC stock is Indian Railway Finance Corporation. You know, right? IRCTC. Everybody might have traveled IRCTC, right? This IRFC is the like comes under the IRCTC, like railway stock. What the stock does is actually this stock is an NFC. Okay, uh, NBFC. What it does is they will be providing a financial support to IRCTC. So it's like a financial support to the IRCTC means they will be providing a financial support if IRCTC is required. So this stock is does that. Okay, exactly. So this NBFC, what they will doing is whatever the government is expanding IRCTC, they have planned, right? Last year, you know, right? There were multiple Vande Bharat train has been introduced. So IRCT is growing. So they if they need money, right? They also have money by selling a tickets, uh, by booking, by selling a tickets and other things. Okay, but uh, but in IRFC, they if they need money, they will get money from the IRFC. It is a finance corporation for railway, Indian Railway. See, Indian Railway, you know, right? It will be very large group. Okay, large group of government. So in the August 2023, it was trading around 38 rupees. Do you remember? In August 23, have only it is the trading around 38 rupees. Now it is trading 113 rupees. If you know about stock market, if you know correctly when to invest, actually you need to know about technical analysis, because you need you know the stock is good, okay, fundamentally, but you don't know when to invest, right? That time you need to know about technical analysis. Okay, see, the 1 year return for the stock is 245%. I said, you know, 5,000 rupees if you invested 6 months ago, today it is 200%. It will be giving a 15,000 rupees today profit, only 6 months of span. So that's what you should know about stock market before going to investment. 6 month itself, it is giving 20 like a 200% return IRFC. So that's how the stock market work. If somebody says it is risky, uh, no, it is not. It is a risky, but it is not that much risky. And MRF, everybody knows about the stock. Whoever is doing a stock market, whoever is in the stock market, everybody is knowing the stock, because in 96, if your grandfather or grandmother bought 10 shares or something in 1996, 2000 rupees it was. Okay, even 2008 it was 3000 rupees in 2008. Okay, it if you bought 10 shares for 33,000. Okay, today it will be around 12 lakhs rupees. Because one share is trading around 1 lakh 20,000 rupees. MRF tires. Okay, that's what MRF is doing. So this is how the stock market is growing every day. If you started your investment at early age, if you know about this when you are doing a college, when you start your career, you start a investment, a systematic investment when you start a career, then you will create a wealth. And then you because everyone, why do we want work actually? To earn money, right? That's what. To earn money, to invest it and double it. Okay, so you will retire at very, you should not depend, you will be having a financial freedom. You won't be end up working for your life, whole life, if you have more money, right? That's what. mm, okay, just will give let me know, guess who is he. Put it in your comment, the comment box. Sorry, the person who is in the picture, let me put that picture here. Guess who is he. Radha Krishna. Yeah, exactly. Even is know about the RK Damani. Yeah, exactly. He is an RK Damani. So um, more, they have guessed it. He's a Rakesh Radhakrishna Kisan Damani. Okay, he's a founder of the world's retail trainers. Like sorry, Indian retail trainers, popular retail trainers, DMart. Okay, he started his career by investing and dealing in stocks and shares in the 1980s. So he created a wealth over a time, and he started his own firm, popular retail firm DMart, which is also um, listed in our stock market. Okay, that is Avenue Supermarket. Okay, so then one more thing. Who is he? Most people will know about him. Good, good. More people were said he. Sorry, I have maybe. Who is he? One minute. Open. Rakesh Jhunjhunwala, correct, correct. Yes, he's Rakesh Jhunjhunwala. He's no more. Actually, he died in August 2022. But what he did it, he's completely created a wealth firm, investment firm, and they were doing a stock market trading from 1980s. Same way Radhakrishnan Damani and Rakesh Jhunjhunwala, everybody is from a same time. They were doing a stock market. From that time they have started investment. See, he has initiated modest investment at 5,000 rupees. Okay, see now his wealth is no 5.9 billion. Okay, that's how you just needed a systematic investment. You know about stock market, you know about investment, the other financial instrument, your risk potential and everything. Then you will be creating a wealth over a time. That's what he did. And he is also called as a big bull in stock market. Okay, and he is also a Warren Buffett of Indian stock market, the Rakesh Jhunjhunwala, the person who was here in this picture. And so I will conclude my the session with what I want to say. Don't work for money, make it work for you actually. Okay, do investments when you start your career so that uh, you will be happy in your life. Exactly what I say, because everybody is born to work, right? So that's why. Mm, okay, let me. Okay, any questions you wanted to uh, raise now? You can raise it. Think up. I hope the session is very interactive. How we diversify our portfolio? What are the factors that affects our asset allocation? Okay, this diversified portfolio, you should not depend upon only one market, like only one sector of investments. Okay, if you know farm d, you are from farm d background, right? You have invested only pharmaceutical. For example, I'm saying if you have invested in pharmaceutical company, so if some pharmaceutical companies were giving a negative return for the current financial year, that some stock might have given, like for example I'm saying Indian Railway Corporation, that was given tremendous return last year. The some stocks were not giving that much return the last year. Okay, so you should diversify your portfolio so that you should invest in all other asset allocation, like mid cap, small cap, and the small cap, and the blue chip stock. Okay, so all these stocks will be giving, because blue chip stock is very much famous for what I can say, very much famous for low risk returns. Okay, because it is a very standard company and they were having a protocol. It is were performing outperformed like last year, but it will not go directly 20-50% in a single year. Okay, mostly the low cap stocks will be giving a return of 20%, 30% in the current financial year. There were a stock that were giving, and there were stock negative returns also given, right? So you should uh, invest in a diversified portfolio. That's what there were many factors that were you can choose a diversified portfolio, Vijay Viknesh. So you should know about it. I can't everything I can't share it here, right? So it is a very vast topic when you choose portfolio, diversified portfolio. Okay, and what is the importance of macroeconomic indicators that influence? Yes, macroeconomic, um, it is also a vast topic. Like we have many other factors, like if bank is giving the inflation rates and everything, uh, uh, because of that, the GDP growth and everything, because of that also the share market is revolving. So the economic factor is also coming into the share market. If government is giving a financial budget, right? If they were providing agriculture budget for that year more, see last year they were giving more budget for the IRCTC. Okay, so the IRF stocks and the railway related stocks were outperformed last year. Same way you need to know about all these terms, and you need to know about the financial thing, right? So that's how it works. But that is a vast topic, we can cover it later. Yeah, same question, what are the importance? Okay, yeah. uh, Economic is a totally a different topic, but we can comes to know about it in the fundamental analysis. The session will be going for the fundamental analysis also. We can do, how do you evaluate the performance of your investment, what are the key matrices for that you use? Okay, the performance of investments is depends upon the risk potential that you have given. Okay, the matrices were there, and that's what it is just giving investment advice this session. But there will be a fundamental analysis session and the technical analysis. We will be focusing more on the performance of the investments. Okay, and everything, whatever the key matrices that we were going to give. Okay, and ma'am, how do you apply behavioral finance principles, overcome cognitive basis to overcome? Yes, okay. See, behavior, I think finance principles like you have a greed, you'll end up having buying the uh, loss aversion, everything, the mentality one. Yeah, this that can repair your investment. Yes, of course, absolutely, yes. Investment it will not much needed, but if you don't know anything, but if some you think like the stock has given more return, but the stock might not perform this year the same way they have performed last year, right? For that you need a fundamental analysis and everything. Yes, absolutely, the behavior finance principle will change your way of investments, exactly, that will affect it. So you should be very confident when you Psychology of Money by Morgan. Yeah, oh great, super. Yeah, Psychology of Money is very much important. Which one is the best SIP or holding? I can't disclose it because I know what is the best and holding in stock, but I won't be giving any investment advices because I'm not yet SEBI registered. I'm planning to do it if I'm invested, I became a SEBI registered. I will do the same investment advices, and yeah, which stock I can give you the stocks and everything holdings. Okay. Mm. But based upon your risk return, you can do investments on mid caps mostly. I'm saying blue chip funds will be less risk. Mid cap is medium, and small is very very high risk. So based upon that, and also considering other factors, not only that, considering it is a common thing of everyone will have, but other principles will be applying when you choose a stock, not only these. Okay. Some blue chip stock also going down for the current year, so you'll end up losing money. It is a giving a negative return as well. So any questions? But this session is a giving, people are asking more questions, that is really great. um, any questions or anything?
Thank you, ma'am. Thank you for sharing your valuable financial insight with us. We will have follow-up series 2 session by this Sunday. So we will update in the same group.
Yeah.
And also we will share the feedback form in the group. Thank you all. Thank you for
Yeah,
joining with us.
please. Yeah, giving thanks, that will be helpful if you give me a feedback for this session. uh, Thank you so much for whoever is joining and making the session very interactive. Thank you, thank you, thank you guys.
Thank you all.